Hey everyone, welcome back. Vitaly is here. On January 1st, 2020, the IRS released a completely new Form W-4. The Form W-4 is a very important form that determines how much of the federal income taxes will be withheld from your paycheck. Filling out Form W-4 correctly is extremely important, and that's exactly what many people struggle to do. With the new form, IRS aims to minimize complexity, make the filling out process more straightforward, and increase transparency of the withholding system. In this video, I'd like to talk about the new Form W-4 and how you should fill it out in order to avoid overpaying taxes and avoid underpaying taxes. The result of incorrect filling the Form W-4 is either you will owe taxes or the IRS will owe you a tax refund. At first sight, it seems that the latter option, overpaying taxes and expecting to get a tax refund, is a way to go, but it's not. While I understand that this is nice to get a tax refund and spend this windfall on whatever you want, by overpaying taxes, you're doing yourself a disservice. And here's why. When you allow the IRS to withhold more taxes from your paycheck, you're essentially lending your money to the IRS for free. The IRS then uses your money for whatever purposes and eventually returns the money back to you in the form of a tax refund. This is an ideal scenario for Uncle Sam, but it's not for you. By keeping your money in your pocket, you could have invested the money and you could have earned interest on your money, which is a much better option. So when you fill out the Form W-4, make sure the IRS does not withhold more taxes from your paycheck than they need. You also don't want to underpay your taxes or withhold less taxes from your paycheck than you should to. If you do so, you might end up owing taxes to the IRS. Plus, this can result in additional tax penalties. So as you can see, it's extremely important to fill out the Form W-4 correctly. So by the time you file your taxes, you neither underpaid your taxes nor overpaid your taxes. Before we walk through the form, it's worth mentioning that there is no need for you to update your current W-form on file merely because of the redesign, and particularly if you still remain employed with the current company. However, if you change companies, then you will need to fill out the new form. All right. Here's the new Form W-4, and as you can see, it's divided into 5 steps. The only 2 steps required for all employees are the step number 1, which is the personal information section, and the step number 5, the section which you date and sign. So let's go ahead and start with filling out the personal information first. I'm going to start with my first and last name, put a fake social security number. Obviously, you would need to put your real one. I'm going to put my business address, but you would need to put your home address. And then you need to decide on the appropriate tax filing status. If you are single and have just one job, or married filing separately, you're basically done with the form. All you need to do is just go to step number 5, sign the form and date it. As you can see, there is no need to calculate allowances as it used to be with an old form. Right now, the process is plain simple. However, if you are single and have more than one job, or if you are married filing jointly and your spouse also works, you would need to go through the step number 2. Basically, the idea behind this section, the step number 2, is to notify the IRS that you or your household have more than one job at a time. This is a very important section, and I want you to pay special attention to it and make sure that you fill it out correctly. Why? Because it will affect the tax rate at which your taxes will be withheld. So let's assume that you are again single and you have 4 jobs, and each pays $25,000 a year for the total annual income of $100,000. When you fill out the Form W-4 at each job, the IRS basically thinks that you are making just $25,000 a year and applies a lower tax withholding rate. But as a matter of fact, a higher tax withholding rate should have been applied because your total income is going to be $100,000. As a result, when you file your taxes, you will probably end up owing money to the IRS and potentially a penalty for underpaying your taxes. The similar situation applies when you're married filing jointly and you and your spouse both have income. If you forget to notify the IRS that your spouse also has income, then you may end up owing taxes due to underpayment. Because again, the IRS will assume that the tax withholding rate should be based on the lower household income, just you, and not on the total household income, you and your spouse. The result will be a potential balance due to the IRS and maybe even a tax penalty. The IRS gives you 2 ways to fill this section correctly. So you can use the estimator by clicking on this link, Or you can use the worksheet, the attached worksheet, to fill this section correctly. The online estimator is the most accurate way to calculate the correct tax withholding. I already checked the website, checked the estimator, and I found it pretty intuitive and easy to use, so I highly encourage you to check it out. But for the purpose of this video, I'm going to walk you through the attached worksheet, and I'm going to assume that you're married, filing jointly, and you and your spouse each have just one job. So let's go ahead and change the tax filing status from single married filing separately to married filing jointly. One cool feature of the new Form W-4 is that if you and your spouse both have similar pay, you can simplify the filling out process by checking the box on line C of step 2. What that means, basically, the IRS knows that there are 2 salaries, 2 incomes in your family, and it will apply the correct tax withholding rate. But it has to be the similar pay. So for example, let's say that one spouse is making $100,000 and the other one is making $95,000. To me, those pays are pretty similar. So you can go ahead and check this box. It's important to mention that it has to be done on the other Form W-4 too. So it has to be done for both spouses. In my example, I'm going to assume that one spouse is making $150,000 a year and the other spouse makes $80,000 a year. So the pays are not similar. What you would need to do is just, you would need to scroll all the way down to page number 4, to the worksheet. Here you will see 3 different tables: married filing jointly, single or married filing separately, and head of household. Again, we are married filing separately. So what we would need to do, we would need to start with the left column and find the salary of the higher paying job. In our case, it's $150,000. Then what we need to do, we need to find the salary of the lower paid spouse, which is $80,000. Now find the amount at which both salaries intersect. In our case, this is the amount, $13,990. Knowing this number, we would need to go to page 3, step 1, and put this number right here. We're going to skip step number 2 because this is not relevant to 1. It says that you or your spouse have 3 jobs at the same time, meaning that one spouse has more than one job. So this is not relevant to us. We're going to go directly to step number 3, the number of pay periods per year for the highest paying job. Again, in this field, you would need to put the number of pay periods for the highest paying job. I would assume that there will be 2 paychecks a month, so for the total amount of 24 pay periods per year. Step number 4 would be to divide line 1 by line 3. I already did my math, and it's going to be $582.91. What you will need to do then, you would need to go back to page 1, but to step 4. Here in step 4, you would need to put this number in line 4C. This additional amount that the IRS will need to withhold from your paycheck per period in order to accurately calculate your tax liability. So this is extremely important. Also, it's worth mentioning that this has to be done only on one Form W-4 and on the Form W-4 of the higher paying job. If you do this on both forms, so you basically will be doubling the numbers. So make sure to do this only on the Form W-4 for the highest paying job. If you are married filing jointly, if you are head of household, or you're single, all you need to do, you would need to again go back to the page number 4, to the worksheet, find the appropriate table, and basically repeat the process. Step number 3 is the section where you will claim credit for qualifying children or any other dependents that you have. If your income will be $200,000 or less when single or married filing separately, or $400,000 or less if married filing jointly, then you are entitled for a child credit of $2,000. If you have 2 children and you are within the income limits, you're going to enter $4,000 here, 2 times 2,000. If you have other qualifying dependents, such as your parents or other relatives, you will do the same but multiply by $500 credit. So I'm going to leave this field blank. Basically, what this means that the IRS will reduce tax withholding from your paycheck because the tax credit is going to minimize your overall taxable liability. Step 4 will help to make your tax withholding rate even more accurate by taking into account any additional income that you expect to receive this year, or by taking into account itemized deductions. So let's say that you expect to receive an additional income, for example, from interest, dividends, maybe capital gains, or maybe you will take a distribution from a retirement account, and you know that there won't be any taxes withheld. As a result of this, you may end up underpaying your taxes. To avoid that, you can enter the expected income in line 4A and prevent this from happening. If you will be itemizing your deductions, meaning claiming deductions other than standard deductions, line 4B is the right place to reflect that and adjust your tax withholding. If you made a sizable charitable donation, had a medical expense in excess of 7.5% of your income, or you own a property, have a mortgage loan, and pay interest, most likely you would want to itemize your deductions. To do that, you would need to use the deduction sheet on page 3, which is right here. However, it's best to consult with your CPA before itemizing your deductions, and for the sake of simplicity, I will leave this field blank. So, the next step and the final step is to sign your form and date it. As you can see, the new form W-4 is indeed much easier and simpler to fill out and complete than the old one. For the majority of people, all they need to do is just to complete step 1 and step 5. If you have more than one job, or you and your spouse both work, or let's say you want to reflect additional income that you expect to get this year, or maybe itemize your deductions, I would recommend to use an online estimator due to a higher accuracy. Finally, as I mentioned previously, there is no need for you to fill the new form W-4 or make any changes to the current one. However, if you end up getting a tax refund, or even worse, end up owing money to the IRS, I highly encourage you to review the form W-4 as soon as possible. Okay, that's it for now, guys. Thanks so much for watching. If you liked the video, please hit the like button below, share with a friend of yours, or even better, subscribe to my channel. I would greatly appreciate it. Bye bye for now and take care.